Hey guys, I hope you're all doing great today. Don't forget to leave a like below if you enjoy these types of videos, and comment if there are any other stocks you'd like me to cover. Today I want to do an in-depth analysis on British American tobacco stock, as well as their recent earnings report for the first half of 2020. In this video, we will be looking at their dividend, historical performance, financials, and the current and future state of the industry, including the ongoing transition to new and less risky products like vaping and heated tobacco. Right now, I think this stock presents one of the best opportunities out there for long-term dividend investors, with an incredibly high current yield of over 8% and 25 years of consecutive growth. This company is growing revenue and earnings, as well as expanding margins through price increases and restructuring. In my opinion, the yield is unlikely to be cut and very likely to continue to grow into the future. So without further ado, let's get into it. British American Tobacco is the largest cigarette maker in the world by revenue. You've probably heard of some of their brands such as Lucky Strike, Camel, and Dunhill. This is a truly global company that sells products all around the world, but about 75% of their business comes from developed markets, and 52% of profits are derived from the US. Now, before we get into the numbers behind this stock, I want to address the elephant in the room. Many people think of the tobacco industry as a dying relic of the past and don't see any future potential for the companies that operate in this space. In my opinion, this is a fundamentally incorrect take on the industry, but at the same time, I am grateful that this is the prevailing sentiment, as it gives investors like you and me the opportunity to get amazing value and benefit greatly into the future. Nicotine products aren't going to disappear anytime soon. I will go much further in depth into my reasoning behind why this industry still has a great future ahead despite declining cigarette volumes later in the video. But for now, let's just take a look at where the stock is now and their most recent earnings report. British American Tobacco trades on the New York Stock Exchange under the ticker BTI. The company is actually based in London and also trades on the London Stock Exchange under the ticker BAT. But I will mainly be looking at the American Depository Receipt shares, as that is how I own the stock. For those of you who aren't familiar with ADRs, basically they're a tool to enable foreign investors to purchase shares in a company through an intermediary bank, in this case Citibank. The only real functional difference is that when you own the BTI shares, a very small fee of about half a cent per share is taken out of the dividend by the bank that is managing the shares. BTI currently trades around $33, down about 5% since their earnings report, despite them slightly beating analyst expectations on both earnings and revenue, giving them a current forward PE of about 8.5 for 2020. Revenues increased 2.4% on a constant currency basis, and adjusted diluted EPS increased 6.6% year over year. New category revenue increased 12.7%. These results show that the company is growing even despite a 4% headwind due to COVID, particularly in developing markets where consumers have been hit harder with less or no government stimulus to make up for the economic slowdown. Also in South Africa, tobacco sales have been completely banned for an indefinite period. Unlike many companies, British American Tobacco is still providing guidance for 2020 and expects full-year revenue growth of 1 to 3%, with EPS growing mid-single digits, basically consistent with the results they've reported for the first half of the year. So this is a company that is actually growing earnings and sales during a global economic downturn. Clearly, this is a defensive business capable of performing through tough times. Additionally, they're expanding margins through not only price increases in their products, but also through restructuring, saving an estimated £1 billion over the next year and a half. And being a tobacco company, margins are already great for this company. Tobacco stocks are cash flow machines, and with this cash flow, the company will be able to easily cover dividends, continue to invest aggressively in new growth categories, and pay down debt. I think BTI is well positioned to improve their balance sheet, grow their dividend, and increase their earnings over the next few years. And for a company trading this cheaply, I think it's honestly a steal right now. Now, I want to discuss the long-term prospects of the business given the industry it operates in. It is true that cigarette volumes are in decline and have been consistently declining for many years. And it is likely that this trend will continue, though in some emerging markets tobacco sales are still growing. And in the US, it does appear that the decline is stabilizing somewhat. But even if this trend does continue, cigarette sales should still remain a dependable and growing, or at the very least stable, source of cash flow for many years into the future. With the kind of market dominance that British American Tobacco has, they are able to continually raise prices and offset any lost sales. In the meantime, all of this cash can be put towards new categories that I think will continue to accelerate over the next 5 to 10 years. The way I see it, nicotine is going to remain a part of people's lives for the foreseeable future. People don't necessarily want to stop using nicotine products. They want to be able to use nicotine in a way that isn't so drastically harmful to their health. There have been some scares in the vaping industry recently that have hurt growth in the short term, but ultimately I think these fears are largely unfounded. All the scientific evidence points towards vaping being a much safer alternative to smoking, and even heated tobacco appears to be somewhat less risky than traditional cigarettes. Eventually, I think vaping will dominate the nicotine market, and BTI is well positioned to take advantage of this transition in consumer preference. In fact, it's in the best interest of tobacco companies for their customers to switch to healthier alternatives. Yes, this will end up cannibalizing some of the money that would have otherwise gone towards cigarettes, but less health risk means less liability risk for these companies, which is always a big concern when you operate in the tobacco industry. And ultimately, selling a product that is addictive but won't kill your customers is a much better situation to be in. Customers that end up dying from lung cancer or other smoking-related health issues are obviously no longer going to be customers. Customers that instead use healthier alternatives will likely continue to use those products for a much longer period. BTI has a dominant position in the vaping industry, with their devices now claiming the #1 position in device sales across all of their key markets. In Canada, their Vuse device has been accelerating rapidly and appears ready to take over 50% of the market, displacing Juul, which consumers are now more wary of following all of the controversy surrounding their products. But what really jumps out at me here is the retention rate, which they report at 100%, meaning that once customers start using their products, they appear to be sticking with them. This is obviously a great sign for the future of their alternative products. If all goes well, I foresee a time when the majority of revenues are derived from alternative nicotine products. This transition will likely be gradual and take place over the next few decades. In my opinion, BTI should be able to slowly grow revenues and earnings from traditional combustibles in the range of 1 to 5% per year going forward, while revenue from new categories should continue to grow in the mid-teens and perhaps even accelerate into the 20% range if these products start to really take off. When seen from this perspective, the stock looks like a very safe bet that will deliver long-term returns in at least the low double digits, including the dividend. The dividend is a major part of why I like this stock. Management has demonstrated a firm commitment to paying and increasing the dividend, evidenced by over 2 decades of consecutive increases. Over the past 15 years, the compound annual growth rate of the dividend has been over 10%, which if they continued at that growth rate going forward would lead to a yield on cost of over 20% in 10 years. The last dividend increase, however, was only 3.65%, and I think it is much more realistic to assume going forward that dividend increases will be in the low single digits, in line or slightly below earnings per share growth. Still, in 10 years, this would leave you with over 10% yield on cost, and with a starting yield of 8%, this level of growth is completely fine with me. I also think that the dividend is very safe. The current payout ratio is only around 68%, and management has been very responsible in their capital allocation. They plan to keep the payout ratio around 65%, so growth will be limited, but the excess cash flow will go towards improving the company's debt load and investing aggressively in areas that will fuel future growth. Now I'd like to go over a few more highlights from their earnings. They highlight their excellent cash flow conversion, which has been in the 70 to 80% range over the last few years, and they are targeting a 90% conversion rate for full year 2020. A high cash flow conversion rate means that overhead costs are very low, and more money makes it to the bottom line. This shows management's prudent capital allocation and financial discipline, and bodes well for the safety of the dividend and the company as a whole going forward. Taking a look at their performance in different categories, cigarette volumes declined about 6.5%, but still revenues increased about 2.2% for the category. Vapor revenues increased almost 40%. This is rebounding off of a suppressed growth rate due to all of the controversy surrounding vapor products. But going forward, I think we should continue to see very strong growth rates in this category. Revenues for tobacco heated products did decline, but volumes continue to increase, and eventually I think this will also be a driver of growth. And the growth rate for modern oral products was very impressive at 70%. However, it is to be expected that growth rates for this category will be higher as it's coming off such a small revenue base to begin with. These products have been performing particularly well in some of the Scandinavian countries. Overall, as I mentioned before, new category revenue increased almost 13%. And I think that over the next few years, we should continue to see this growth rate bump up. Around 10% of revenue for this company is now derived from non-combustible products, and they have over 11 million consumers of these products today. Management has also set ambitious targets of 50 million non-combustible product consumers by 2030 and $5 billion of new category revenue by 2025. They also highlight their growing value and volume share across categories. This is very important to take note of, as it shows why British American Tobacco could be a better choice than some of the other tobacco companies out there. Even as cigarette volumes decline, BTI continues to take a larger piece of what's left. This should mean, in theory, that their declines in cigarette sales should trail competitors, while their dominance in new categories should continue to increase. In conclusion, I think that British American Tobacco has been severely underpriced by the market and offers great value for long-term dividend investors. Their 8% dividend yield is safe and should continue to grow. Their core tobacco business is in decline, but the decline is manageable, and cigarettes should continue to provide a slowly growing source of cash flow despite volume declines. I think that management's strategy of using this high-margin, high-cash flow business to invest in new categories and diversify the business away from traditional tobacco will position the company well to thrive into the future. If you're looking to double your money quickly, this probably isn't the stock for you. But if you're looking for a reliable and growing source of cash flow that will provide market-beating returns over the next decade, I think that this stock is an excellent choice. I want to thank you all for watching this video today. If you enjoyed or got any value out of it, leave a like and subscribe for more. If you've got any questions, comments, criticisms, or other stocks you'd like me to cover, leave it in the comments and I'll be sure to respond. I'll see you guys in the next video.